Let's get back to technology. The Nasdaq is up 255 points today, a little bit more than 1%. So it's really been performing well. We want to talk tech. We talked to Dan Ives, Global Head of Technology Research at Wedbush Securities. Dan, I'm guessing the conversations you're having with your clients over the last several weeks are a lot different than what they were kind of late last year as it relates to tech. How do you frame it out for us?
Look, Paul, I think right now it's really about, okay, CapEx, but where's the monetization? Are you starting to see it? Is it starting to actually spread out beyond just big tech? And I think you're starting to see that obviously with Intel, Cisco, and others. Look, and obviously it's been a huge debate, right? Relative to the Anthropic software ghost trade. We saw what happened this week in terms of ServiceNow and others. So I think I would call it a huge debate. And that's why it all leads to next week really being like huge pieces to the puzzle of the tech trade.
And speaking of next week, a ton of earnings coming out. Wednesday is going to be the high water mark. You've got Microsoft, Meta, Alphabet, Qualcomm, Amazon, all reporting after the close. In total, 13 companies within the NASDAQ 100 reporting on Wednesday. So Dan is going to be very busy on that day. But Dan, what is the market sentiment like right now when it comes to CapEx? Because for a while, if companies reported ended up saying that CapEx would be more than they had forecast, it was seen as okay, and then it was seen as negative. How are investors feeling right now?
Yeah, it's sort of that's been a hot and cold situation, right? Relative to the CapEx. I think now there's almost a consensus view where it's like, okay, CapEx is going to be reiterated by big tech. No big tech company is going to slow down CapEx going into next week. If they did, stock would be down because that would ultimately be a negative in this arms race. I think the big question is going to be with the hyperscalers, specifically Microsoft, Google, Amazon. Do you see accelerations beats when it comes to cloud growth? That's important in terms of capacity. But look, what it really means is the capex is now starting to bear fruit. The monetization's happening. You're seeing it on the software and the hyperscaler side. And look, that's the big piece. That's really the debate. Do you start seeing monetization? I think we start to see it next week. And I think Meta is another one we'll see on the advertising side.
Dan, I know you initiated coverage of Oracle. Talk to us about that company, how you see it participating in this tech stack here going forward.
Yeah, and Paul, I covered it for many years, and the reason I like reinitiate on it here is just because I believe the street is way miscalculating this name. I mean, look, I get the worries about the debt and what they're taking on given OpenAI and what they're going for in terms of the 700 billion that they're going after and the 50 billion of debt. I think Oracle is going to be a tremendously bigger company the next 2, 3, 4 years than it is today. I think investors are way discounting their ability to monetize what's going to be this backlog and really, as more and more companies move to the AI revolution with Oracle. And that's our whole call. I mean, 225 is price target, but this stock ultimately that could double as they monetize AI over the coming years. I think way, way oversold.
I mean, the thing with Oracle is that it needs to borrow so much money that it's got to tap the public markets and the private markets kind of everywhere in order to be able to fund this build out. And we've heard from Moody's warning that private credit funds with a lot of exposure to software and tech face a lot of refinancing risks because there's a bunch of debt that matures starting in 2028. How do you think about that in terms of what that means for these big tech companies' needs to borrow?
Yeah, I think, and look, it's a great point. Obviously, huge debate. Like when you get things like Thoma Bravo, Medallion, some other thing, you can paint them all with the same brush, right? When you look at Oracle, you're talking about a company that the amount of debt that they'll take on is still pretty small relative to their cash flow generation and the overall, what I believe, structure of the business. I think they'll be able to raise, and they've already sort of laid out the 45 to 50 billion how they're going to do that. Now, look, is it ideal? Because companies obviously free cash flow, you don't want to see software companies take on debt. But Scott, my view is to take on 50 billion of debt to go after 800 billion, that to me is a bet that I want to see them take.
Hey, Dan, let's just switch gears to Tesla. They made some news just yesterday, kind of talking about CapEx, and they're boosting their CapEx to $25 billion for AI and for their robot business. Put that in context for us. How do you think is that a good move for this company?
I think it's exactly what they need to do. I mean, Paul, we've always talked about it a lot. It's like the future is about autonomous robotics. I mean, this is a company from a physical AI perspective. I view NVIDIA and Tesla, the two best physical AI players in the market. I want to see them do this step by step, build it, because that's really the next 5, 10 years. That's what Tesla's an AI company going forward. This is not an auto company.
Yeah, that's been made very clear. I mean, certainly Elon Musk has been pushing that narrative for a long time now. I'm curious, and this is might be a really basic question, but how does the war in Iran and the uncertainty there affect these big tech companies as they report? I mean, do we expect any kind of mention of the uncertainty, the fog of war, affecting their decision making, their planning in any way?
I mean, like ServiceNow hit it a bit, right, in terms of some of the Middle East deals. Look, I think when you think in terms of a lot of the build outs outside the US, some of the bigger data center, big AI build outs are in UAE, Saudi. But I don't really think that that's something that's going to be a huge thing on the conference call. I think that's much more year and a half from now, 2 years from now. Now, I think the big question is supply, helium, especially through the Strait. We were just in Asia for 2 weeks. I continue to think unless this stalemate lasts past Memorial Day into June, July, like for now, I think it's pretty contained. But look, I think investors want to understand what the demand environment looks like, and these companies, they're not slowing things down in any way
Right.
because of the geopolitical.